You work hard for your money so that one day you can retire. In these crazy economic times, central banks have been printing so much money which causes inflation. If you just own cash, the relative buying power and value of your dollars go down by the day. You lose to inflation. So you need to invest whatever money that you can save in something that keeps up with, or better yet, beats inflation, like the stock market. But what is the easiest and best way to do that without taking too much time and without making costly mistakes? Well, let's ask legendary investor himself, Warren Buffett. Warren Buffett has been quoted as saying that for most people, buying index funds is probably the easiest, safest, and most profitable way to invest over the long term. In fact, in 2007, Warren Buffett made a $1 million bet against protege partners that hedge funds wouldn't outperform an S&P 500 index fund, and he won. Buffett's choice fund, the Vanguard 500 Index Fund, Admiral shares, returned 7.1% compounded annually, while the basket of hedge funds his competitor chose returned an average of only 2.2%, according to the Wall Street Journal. We ran our own study using backtesting software and historical data and found that the average market returns for the SPY ETF fund, which tracks the 500 largest companies as listed in the S&P 500, returned about 5 to 7% annually, including dividends on an average over the last 20 years. During the same period of time, the largest market decline was 55%. What this really means is that with a $100,000 investment, you would have risked losing $55,000 in order to earn $5,000 to $7,000 per year with an index fund like the SPY. A bit scary. So what can you do? Perhaps you tried to build a diversified portfolio to help balance out the ups and downs and market risks, but eventually realized that you can still have big drawdowns and losses when markets go down, since everything becomes correlated during those periods of time. Or perhaps you've tried the roller coaster ride of day trading and have experienced the emotional challenges, death by 1,000 cuts, quick reaction times needed, and have spent many days in front of computer screens with no return on your time or effort. Well, luckily, there's a better way with systematic investing. With systematic investing, you stand a good chance of more than doubling the average market returns over index funds that we just talked about, while at the same time limiting your overall risk and overall losses to less than half versus just owning index funds or versus just owning a diversified portfolio. Systematic trading allows you to trade and invest with the benefits of using portfolios while also taking advantage of being more active and quicker to react to changing market conditions while being much more strategic in your decision-making process. Systematic trading is also transparent and rules-based, so there is a specific reason behind each and every trade decision, whether a new buy or whether a sell for profit or a sell to exit at a loss. Yes, there will be losses in any trading. Systematic trading is also extremely consistent and mechanical, so you won't get stuck in an analysis paralysis loop. You know exactly what to do at each and every step. And systematic investing uses strategies that work. And we know they work because they've been developed by experienced strategy developers and then rigorously backtested and quantified using over 20 years of historical data. So we can see how these strategies have performed in different market conditions too. Systematic trading gives you a process that is repeatable and measurable so that you have a better idea of what you can expect from the markets. Placing trades for strategies can be performed manually, semi-automatically, or even on autopilot in a fully automatic way using specific software tools. You can manage the systematic investing process in as little as 5 minutes per day, so you don't have to spend all day in front of the computer. In order to learn more and get started today, just follow the steps in order as indicated in the flowchart beside this video or on our site www.systematic-investors.com from the main page or page entitled How It Works. You'll be glad that you did.